Hi, my name is Brad Sampson. I'm the Chief Executive Officer of Core Potash, and over the next few minutes, I'd like to tell you our story. If you're planning to invest in Core, I'd encourage you to read this disclaimer. This and all the slides I'll talk to today are available on the company's website. Core will become the lowest cost supplier of potash to our target markets in Africa and South America. We hold globally significant potash deposits in the Republic of the Congo. These deposits are amongst the highest grade of potash deposits globally, and the DX deposit has the lowest development cost of any potash peer in the world. We have district scale development potential with over 6 billion tonnes of potash mineral resources located very close to the coast. We recently completed a preliminary feasibility study on the DX deposit. DX is the deposit we're targeting for first production, and the pre-feasibility study indicated industry low capital costs of $286 million, including contingency, with an internal rate of return of just under 23%. DX deposits characterised by very low operating costs, forecasting costs at the mine gate just over $65 per tonne, and at the ship loading point in Pointe Noire, just under $87 per tonne. We will be producing MOP, or Muriate of Potash. This is a very important fertiliser that's needed to feed the growing population of the world. Population is growing. Arable land available per person is declining. We need to boost yields to produce the food to feed the people. That translates into ongoing demand growth for potash. And you can see in that graph there's been demand growth of 2 to 3% per annum. The large global potash market and the growing demand has recently attracted the interest of a number of majors, and you've all seen how these events have played out in the press recently. In May 2020, we completed a preliminary feasibility study on the DX deposit. We've designed a simple, technically robust solution mining method to produce 400,000 tonnes per annum of MOP over an initial life of just over 18 years. That 18-year life is based completely on ore reserves. In addition to that, we have significant mineral resources that have not yet been scheduled for production. We have a very low capital cost forecast of $286 million, giving us a capital intensity of $715 per tonne, which is very competitive globally. We have a very short construction period of 21 months. And importantly for us, this project is situated within an existing mining licence, and we have an existing mining convention in place with the government of the Congo. We're at a very advanced stage of permitting. The DX deposit has very low costs of supply into our target markets in comparison to all of our peers globally. This is driven in part by our very high grade, our very shallow depths, and our proximity to a deep water port at Pointe Noire. We have a very short land transport distance to port, and then we have a very short shipping distance to our target markets. This gives us a competitive advantage that doesn't change. In a situation where global economy is booming or there are other drivers for land transport and shipping costs to increase, our competitive advantage over our peers grows. We have very high-grade deposits. The DX deposit is probably the highest grade undeveloped potash project in the world. There are other projects that come close to us in terms of grade, and they are 3 or more times deeper than the DX deposit. There are other projects that are very shallow. They tend to have very, very poor grades. We're the only company that has the unique combination of very high grades and very shallow depths. And on top of that, we're located very close to a port. That in part translates into our capital cost to get to first production being the lowest in the world in comparison to our potash peers. Once we're in production, we'll have very low operating costs. You can see in the top graph on this slide, at the ship loading point, we'll be very competitive in comparison to all of our potash industry peers. On the right, There's a group of MOP development projects on the left, some other sources of potassium. Even in comparison to the Woodsmith project, the DX project will be very cost competitive. On a potassium for potassium basis, I estimate some 4.4 tonnes of the Woodsmith product is required to deliver the same potassium as 1 tonne of MOP from the DX project. You can see in the bottom graph, our scale is, in comparison to existing potash producers, is very small, yet our costs are very low. Right? We're planning to produce 400,000 tonnes per annum of MOP from the DX project. That represents approximately 0.6% of global demand for potash. Even though our costs are very low, this project is not going to be disruptive in the potash space. We have a mining convention in place that formalises the fiscal and legal relationship between the company and the government of the Congo. We have 2 existing mining licenses at Kola and Dugu, and the DX project sits within the existing Dugu mining license. All of those permits are already in place. The Dugu mining license has an existing ESIA, and it is an approved ESIA. Once we finish the design for the DX project, we will submit amendments to the existing ESIA, and we do not anticipate that approval process for that amended ESIA entering the critical path for the development of this project. We have district scale development potential at the Congo. The DX project is our starter project. We have some 6 billion tonnes of potash mineral resources located at Kola and at DX, where we have very high grade sylvinite deposits, and then we have lower grade carnallite deposits at Dugu, and then underneath the Kola sylvinite deposit. We've completed a definitive feasibility study on Kola. We've received EPC proposals. That project is effectively development ready. We're currently focused on DX because it represents the fastest route to first cash generation and potash production. What's next for the company? We've demonstrated through the pre-feasibility study that DX is the fastest route to production, and in fact is a very low capital, high return project in its own right. We intend to move forward as quickly as possible to undertake a definitive feasibility study for the DX project. We're in the process of finalising the work plan for the DX definitive feasibility study. We anticipate that feasibility study will take less than 12 months to complete. I think it's important, that we note in the pre-feasibility study, we scheduled 22% of the mineral resources. We'll spend some time attempting to take advantage of the large mineral resource that we have not yet scheduled to increase the mine life. Over coming months, we'll continue our offtake discussions with the multiple interested parties. Offtake's important. That once we have a bankable offtake agreement in place, that will help us meet all of the requirements for debt funding for this project, and we intend to continue our discussions with the interested lender group that we've been dealing with through the preliminary feasibility study. Our modelling suggests that the DX project has a debt carrying capacity of some $150 million, and we expect debt to play an important part of the financing mix going forward. Thank you.